Facebook. If you're here right now, say what up. Good morning. I'm looking a little rough this morning. Looks like the baby got up a little bit early, you know. So we have fun. S&P is down 12. Dow is down 136. NASDAQ is down 28 currently. Looks like we're having a little issue with the live stream. Let's see what's going on here. YouTube is not receiving enough video. The main strain. I think you guys missed the intro. If you're here right now, say what up. It looks like the, I don't know if it's my internet or what, but the YouTube is saying my video output is low. Okay. It's weird. It's like, because it said it wasn't going live and everything was like paused. So, all right, sorry guys. Good morning. As I was saying, Colin, if you're here right now, say what up. Still saying my video output's low, but we'll see. We'll see how it goes, guys. We'll see how it goes. I've actually used all of my bandwidth with Comcast, and they said that. So I keep paying overage fees, but that shouldn't speed down my internet. Let's see. Who's here? Kelly, Jeff, Colin, Mason, Hamza, Daniel, Lion, Dexter. What's going on? Happy Friday. We made it through the fire. I would say this week was kind of a difficult trading week because the market cared about the coronavirus, then it didn't care about the coronavirus, then it cared, and then it didn't care, and we're like, you know, it's the trade war all over again. You know what I mean? Eric, what's going on? But yeah, as I was saying, S&Ps. It looks like I'm good now. S&Ps are down 12. Dow is down 130. Nasdaq is down 25. Gold is down a little bit. VIX is up a little bit. Looks like S&Ps are looking to push a little bit higher. But today is the day. Global markets are down today due to today is Brexit Day. So let me get some news popping over here. Come on. Why is that? Okay. So Brexit Day, global markets are down due to mostly Brexit. Yeah, the impeachment, but the media is not really talking about the impeachment, which is interesting. But yeah, volatility is what we want for options trading. So the UK is about to leave the EU, marking one of the biggest political and economic shifts in modern Europe. There were tears of sadness and a little joy as the European Parliament on Wednesday ratified the terms of the UK's departure. But I mean, I think I think they're doing what's best for their people. At the end of the day, and we'll see what happens. I mean, I don't live in the UK, so I can't say, from the outside, like if you think about it, if we were part of like some sort of North American where we tied to Canada and Mexico, we would probably want to, Dr. Pepper cures coronavirus by KDP. Interesting. So that's happening right now. Also, the kind of some updates from the coronavirus. The U.S. says, hey, please don't travel to China. I did notice that I did see a report this morning saying, hey, you can actually fly. I don't know where it was, but you'd have to stop in Wuhan for, as a layover or whatever. You have to stop in Wuhan, but flights to somewhere in I don't even remember what it was, but it was like $190 from the US, but you have to stop in Wuhan. Great guys, let's just stop in Wuhan and spread the virus all over the world. I don't know why airlines are still going there. So right now, China's saying that coronavirus is above 10,000 cases. Right now, 213 deaths. Also, England's chief medical officer confirmed the first 2 cases of coronavirus in the UK less than 24 hours after the WHO declared the outbreak a global emergency. Yo, Rob, do me a favor, guys. Hit that like button. I appreciate it. Whenever I see Rob, it's my cue to say like the video. Amazon daily options for me after 2 p.m. calls or puts. Yeah, right now we'll see. Singapore bans Chinese travelers. Let's see. I think that's about it. So right now the count is death count 200, and the cases are at 10,000. So not great, but so right now, Amazon obviously had killer earnings yesterday. Let's see if we pull this up. So, Amazon. Come on. Amazon's profits rebounded during the quarter while revenue climbed 21% year over year. Where was that other article here? Yeah, AWS generated revenue of $9.95 billion in Q4, up 34% from a year ago. So AWS is going nuts. Yeah, let's take a look at Visa as well. Yeah, Amazon. The thing with Amazon though is it was bound to happen eventually, because I mean literally all the stocks are running, but Amazon has pretty much been range bound for the past year. It's been chilling, but now above that 2100 mark. I mean, it touched 2133, currently at 2073. So it's still higher than the 52-week high. So we'll see where it goes, but I feel like it's gonna squeeze a bit. Visa also had earnings. I wasn't really liking a Visa play. I did sell some premium. In Amazon. So yeah, Visa. They were expected to have like a $4. It was like $4 expected move. And I didn't feel good about Visa having this major run, and all the other credit card companies had really good earnings, but Visa did not. so people were loading the boat thinking, okay, well, if all the other credit card companies had good earnings, probably Visa is going to have good earnings too, which is a pretty safe bet. But you see, that's how it's how it goes sometimes. It's kind of like the banks. Just because Goldman Sachs had great earnings doesn't mean Bank of America is going to be. I mean, chances are higher, because it kind of gives you the overall, it kind of gives you a glimpse of what one company is doing in the overall market. But at the same time, like Visa, their competition. So if Visa's competition is doing well, does that mean Visa's doing well? So, yep. Probably rip puts too. Well, actually down $6, so it's outside the expected move. So that's actually pretty good for the downside, because it really ramped up. It really ramped up at close yesterday. Went from 204 up to 208, and that's why I didn't like selling premium in here, because the expected move was like $4, and now it's down $6. So, but for Amazon, let's see what I have here on Amazon. So Amazon, I have actually I already put my order in, it looks like. Amazon, I sold 2 of the, hold on. So yesterday I got a $1.25 credit times 2, so $2.50 credit. I sold the 1865 puts, and I bought the 1862.50 put, so it was a pretty safe bet. What I did yesterday on Amazon was I actually put on the trade earlier. Normally I like to wait a little bit closer to close for earnings, but I put the trade on at 112. So I saw it starting to ramp up here. So I put the trade on like right in here, and I'm glad I did because that's still. But I guess it wouldn't really have mattered. I guess the only regret is when you're trading Amazon in a bullish way. I mean, your only regret was you didn't buy more. That was pretty much the only regret. The only regret is you didn't buy more. So I put my order in for 5 cents. I do have it for next week expiration because I wasn't sure if Amazon. I mean, I thought that it was going to go up, obviously, because I put a bullish position on. But at the same time, with earnings, you just never know if it's going to stay the same, if it's going to rip lower and then rebound. So I was giving myself enough time. I didn't do today's expiration. I did next Friday's expiration. So, I'm not going to get like 100% credit, and I'm okay with that. I mean, the amount that it moved already, so it's going to be interesting at open what that is going to be like, that position. Hopefully I get filled. Otherwise, I have to stare at that. I mean, I don't care. It'll go down to zero eventually, but then we have to sit with that in our account for the next week, which is fine. But I'd rather just kind of clean up the P&L, starting out next week fresh, and go from there. So we're looking to get close to max profit on that. So 250 with a 250 profit, but I put in 5 cent order, so 240. Roku. Someone said Roku. Roku, yeah. I've been trading Roku, but I've taken the last few. This week I haven't done a Roku trade, and man, what's up? Mainly because we're still in a very descending pattern here. It hasn't broke out of range right now. In order to break trend, we need to break 140 here. It could, but right now I'm a little bit worried here on this descending pattern right now. And we have earnings on February 13th, so we'll see what happens. I did buy the Disney 140 call yesterday, so I'm currently in Disney 140 call. That is up a little bit money. I do have it for what expiration do I have here? Let's see. So I do have Disney. I bought it for $216. I have 2 weeks on it. I have February 14th. I think Disney's probably going to blow things out. This is the first quarter that Disney is reporting Disney Plus numbers, and I don't normally buy premium for earnings, like ever. I just don't buy. Even with Amazon, I didn't buy Disney. The reason why I bought Disney is IV rank is really low, 23 this week. Next week when there's earnings, 41%. The following week when I'm in the 33% implied volatility. Expected move is $7 right now, so I'm within the expected move. I have the 140. I have the 140 call. Colin, 140 call. I bought it for $216. Currently, the 140 call is going for $272. So I'm up like $60 on it. Currently up 28. Currently up on that 25%, 24%. So Disney, I'm expecting a blowout. It's come back down. What I liked about Disney is that it bounced off 135. It's bounced quite a few times off 135. Obviously, it has gone lower, but as you can see, like compared to last earnings, it's kind of following the same little bit of setup. It stayed the same, then it dropped lower before earnings, and then it ripped up, and it kind of like stayed the same, then dropped lower before earnings. And my goal is for it to rip up. At the end of the day, biggest loss is going to be 216. So, we're gonna be okay. That's just part of. I mean, earnings. If you're new to trading, earnings is a gamble. So, don't let this be like, oh, because I won on Amazon, I'm going to put those profits in this. And, with my earnings trades, I'm very, very selective. I didn't do a single earnings trade this week until Amazon. I passed on everybody. I passed on Facebook. I passed on, who else had earnings this week? I passed on Apple, Starbucks, AMD, McDonald's. Boeing. I passed on everybody. Tesla, Microsoft. I traded no earnings. The only earnings I traded this week was Amazon, and I bought Disney for next week's earnings. So yeah, next week is Disney is Tuesday, I believe. Yeah, Tuesday. So So when you're a lot of like beginner traders, they get in this mentality like, okay, this company's doing earnings, I have to trade it, I have to do this, I have to do that. You don't have to do anything. Only trade the companies and the setups that you know that you believe in, and you know that you've profited on in the past. If you're not sure what those are yet, paper trade the earnings. You can go to Thinkorswim paper trade, put a trade on, put a spread on, buy some calls, whatever you want, and it doesn't cost you any money. And then you can start to understand what earnings you're good at, what earnings you're bad at. And I only trade, since I've been trading for a while now, I only trade the type of setups and the stocks for earnings that I know or believe that I can win. Sure, I don't win every time. Like Intel, last week I lost $33 on a spread. It went beyond the expected move. I lost some money. Thankfully, I capped my losses at $33 and I moved on. So, you have to find as a trader in terms of earnings and, setups, what works for you, what doesn't work for you, what works with your schedule, and all of that. Most of the time when I was a stockbroker in the past, we really traded earnings because we didn't want to crush the client's books. Yeah, because it's a gamble. Like if someone's trusting you with your money, so I said, hey, Mr. So-and-so, here's $10,000, please take care of it for me. You're not going to go right to the casino and say, okay, let's go all on black or all on red and see if we can double this guy's earning, his portfolio. You don't do that. Earnings are a gamble. The only reason you would hold through earnings typically is if you have stock. Obviously long-term holds, stuff like that is different, but you don't just go gambling. And when I do trade earnings, I really only risk max $200, honestly. Most of my earning trades, I risk $100, but for like day trades and stuff that I know that I can win, I go higher, $500, $800, $1,000. But for earnings, I go small just because anything can happen. I mean, you may think Disney can have killer earnings, but then they're like, oh yeah, we're gonna have to take a big write-off because Shanghai Disney's closed, and now we don't know when it's gonna open and all this stuff. So there's that piece of it. So I'm not risking, when you trade earnings, you risk a very small slice, and you only trade what you know you can win. And you're going to be wrong. You're going to be wrong, and that's okay. There's no trader out there that wins 100% of the time. I know there's a lot of people on YouTube, Twitter, Instagram that just post massive gains, and they never show their losses, and that's wrong because every single trader, you're never going to have 100% win rate. Never. You have to define your risk. You have to be able to exit a trade when you're wrong, and otherwise it just goes to zero. We had a saying on the trading floor: when people say one thing, trade the other way. Yeah, that's why we call us versus herd. Expedia. Yeah, so Expedia and booking thoughts. I mean, travel, for as long as this happens, it's only going to get worse for travel. Yeah, most people, Colin, most people do blow their whole account. Most people. I did put up a podcast out about that. Got a lot of messages about it because a lot of people do blow up their account. But then some people blow up, like some people, like for Tesla, like blow up their account in a good way. So like right now, people are winning, and it's not because they're knowledgeable or know more about the market. It's because they're gambling. And if you look at Tesla, it's very easy just to keep buying calls. No matter how expensive they are, you don't care. Like people that blow up their accounts, they don't care how much things cost. They just want to be in for the ride, right? And they're making money. What they do is build like a false sense of confidence in saying, oh, I really know what I'm doing. I'm a pro. I can do this. I can do that. But then when things get hard, they put the same amount of risk in, thinking they're going to get the same amount of returns, and then they lose all that they made on this great play. You know what I mean? So it's just hard. So that's why, for me personally, I'm always just managing risk. It doesn't matter how much money that I make on a particular trade. It can't change your mentality. When it starts changing your mentality is when you start getting arrogant, cocky, and that's when the market starts to humble you and kicks your kneecaps out and blows you apart. You know what I mean? Like, arrogance in the market is the number one way to lose money. You're gonna win for a time. You're gonna win for a time, but your day is gonna come. Your day is gonna come. It's gonna hurt bad. It's gonna hurt bad. There's traders. There's traders that have made 6, 7 figures and lost more than that because the market humbled them. You know what I mean? So, most of the trading, you can know all the strategies, you can know all the numbers and all that, but most of it is psychological mentality and really trying to control yourself, control your risk. Because the market's amazing. You could turn $1,000 into $100,000. We'll probably see online all these people that have made millions on Tesla, millions on Amazon, hundreds. We turned 3,000 into 6 figures on Amazon and all that. And then they go take that, if I could take 3,000 to make 100,000, why can't I take 100,000 and make $1 million? Makes sense, right? And then they go do it, and then they blow their account up. So it's the real traders that know what they're doing, they're the quiet ones. They're the quiet ones. They'll speak up, but they're if they're making bags on Tesla or Amazon, they're not going to be bragging about it and posting pictures next to the Ferraris and planes. They're gonna be stacking that bag, and it doesn't matter to you. It doesn't matter to you how good their trade was because it doesn't impact you. It only impacts them. So I'm off my rant now. But yeah, Kelly, get back to your question. Travel's gonna be down. For as long as it's gonna go for. Travel's gonna get hurt. As you can see, we're already dipping, booking, coming back down here to the support levels, 1850 area. It's gonna get bad. If you're just joining, say what up. Drop a like, I'd appreciate it. Looks like futures are still down, moving down a little bit. S&P still down 13, Dow's down 151, NASDAQ down 24. Caterpillar had earnings this morning, right? And Exxon. Yeah, Caterpillar. Expected move for Caterpillar was 469. It's only moved a buck 25. So a buck 25 on Caterpillar. So within the expected move, it's already dropped. It's already dropped the last couple of days. So that's probably why it's just kind of chilling. It's kind of back into the middle ground here for the year. Had some wide ranges on Caterpillar because they are also impacted greatly by China. They do pay a nice dividend though, so if you're an investor or have shareholders, load up. Like the trade war and the coronavirus, all of that stuff's gonna pass. The question is, it's not about if it's gonna pass. The question is when. What's the market gonna do in the short term? What's the market gonna do in the long term? How can you benefit from it? If you're not in a position to benefit how can you protect yourself, right? From your stocks, if you're big on travel stocks, if you have a lot of airline stocks. I think not a lot of people are. I think after 2008 and especially during the 9/11, I think the older generation has kind of weaned off the airline stocks because they got rid of the airline stocks. Used to be really, really big. Everyone had a portfolio, but I think since 9/11 and the recession, they started to cut those out because the airlines went down a lot. So Caterpillar, Exxon. See where Exxon is, man. Exxon's been getting slaughtered this year. They posted great profits, but I think they're just The downtrend is real. The downtrend is real. Yeah, and that's the other thing, Colin. What you're saying is normally don't use stop losses. We'll get wrecked on any major pullback. The one thing that I will be saying, like the down moves that we've been having this week have been like there's been no panic. It's been very controlled. It's been very slow. The market, we're mostly there's a lot of pre-market and after hours action, but then when the market opens, we're like stuck. We're like, which way we're gonna go? What's gonna happen? Maybe we'll go up a couple dollars, go down a couple dollars, but then the market's kind of unchanged and from the market open, and there's really no panic, but there's no buying because people are like, what the heck is going on? So it's interesting right now. So that's another thing. I've been really slow with my trades this week because of the uncertainty. I've been waiting for setups. There's been a lot of earnings. I haven't been trading the earnings, so thankfully though Amazon worked out for the one earnings that I did do. Good ideas playing May. Oh, in May? You're talking about May expiration? Let's see what AMD's doing. AMD, and that pushed up nice. It pushed up nice from 45 right there up to almost 49. That's nice. I don't know if anyone trade that. People, there are a lot of bag holders because AMD is one of those, I don't know, cultish stocks, or you want to call it Robinhood stocks, where everyone has in their portfolio or everyone trades, because AMD went from what? Well, this year 21, but it used to be one of the cheaper stocks. Yeah, it went from $9. So basically kind of went from Pennyland territory to be like a legitimate stock. And those traders have been holding and just making money on it. So they thought because of this run, they were going to have blowout earnings. And then they had good earnings, but they had light guidance, which then punished the stock, shook out those calls, and now we're moving back up. Thoughts on Disney? I'm in Disney right now. The only thing that I'm worried about is how much money they're going to have to lose on Shanghai Disney. That's the only. Disney, I think, is really strong right now. The question is, how much are they going to lose on Shanghai Disney? That's the only thing. That's the only question. The longer they're closed, the more money they're going to lose. So, MD going to crash so hard. These Robinhood guys. Yeah, I mean, I think light guidance for the year, and then let's say next quarter is down or less than what is expected. I mean, I definitely think it could come back down to like the $30 range, which is still amazing. Going from $9 to $30 in 2 years is amazing. But so many people are like, "Oh yeah, it's going to 75, it's going to 100." Like, bro, you gotta chill. you gotta relax. I like to see people make money, but I also like to see that there's some. I guess the markets are unreasonable, so there's no point in saying that. There's either fear or there's greed, and there's everything in between. But yeah, looks like puts are destroyed. Yeah, Apple's going down. So things are down a tad. Nothing too crazy, but it looks like volatility is kind of kicking back up because what we have here on the VIX. Yeah, my favorite time to trade is when VIX is like between 16 and 19. That's I've noticed that's the best range for me to make the most money. When VIX is too low or VIX is too high, I don't perform as well as when VIX is between like 16 and 19. Like that's my sweet spot. 15 is good too, but VIX 16 and 19 is what I like. So I don't think I got a fill on probably not gonna get a fill on Amazon. No fills yet on my 5-cent order. Nobody wants my 1865 puts. No one wants me to buy them back here. Let's see here. Let's see what these calls are up. And these calls are up 2,000%. 2,000%. insane. Let's see what these 2,000 calls were going for. Let's see these 2,050 calls for today. So yesterday, the 2050 calls were going for 25 cents as a low, hit up to $31 at open. Oh my gosh. That is amazing. And that's why you love, trading. Oh, thanks, Thinkorswim, for alerting me that Amazon's above 1925. I had that 1925 alert in there for weeks. It's amazing. But then, who's gonna gamble? I wasn't gonna gamble the 2050 calls. You know what I mean? Good stuff, Daniel. So people get discouraged when things like man, if I could only get some of those 2050 calls for 25 cents and stuff like that, is you don't know, so don't be so hard on yourself. If you knew the future, everyone would be rich. The markets would, someone would probably figure out how to change the market so that way you would lose. But that's part of the fun. Like one of the things that I love about the markets is that it's always changing, is always a challenge. And that's what I like. If every day was the same, I wouldn't do it. If every day was the same trading, I would quit because it would be boring to me. I like the challenge. So yeah, it doesn't look like anyone's gonna I'm not gonna be able to buy back my puts here, my put spread. So it looks like I'm holding it into my account till next week. I'll keep my order in, but that's about it. So you guys stay safe, stay green. It's us versus herd.